What's going on, guys? It's GBP baby. Welcome to another backtesting video. Today we're going to be looking at GBP USD. We're going to be looking at last week's price action. So I'm going to be using the 5 minute due to the fact that I do want to get through the charts a little bit quicker this time around. I usually look at the 1 minute, but we're going to look at the 5 minute because I want to get through the week. This was one of my most accurate weeks yet, so I think it's going to be good and healthy for us to backtest it. And yeah, we'll jump right straight into things. I'm not really sure how long it's going to take. I haven't done a 5 minute backtesting video in a very, very long time, so should be good. But yeah, I hope everyone's well. Hope everyone's staying safe. And we'll get straight into the Asian session, which starts at 7 p.m. So we're going to mark that out with purple as per usual. And that's what I was saying. It's been a very long time since I've backtested on the 5 minute chart. I used to always do my backtesting on the 5 minute chart, but this time around. But then I changed. I used to always do my backtesting on the 5 minute. Then I changed to the 1 minute. But now we're back on the 5 minute. What goes around comes around, guys. So I'll just make these a little bit more visible for us. And let me just quickly mark out the London session, which is 2 a.m. One thing I've definitely learned now with the London session is the importance of the 3 a.m. Because at 3 a.m. 3 a.m. is when it starts to get active. This isn't a very good example of that. But 3 a.m. there's usually a run to liquidity, like price action starts to pick up. There's probably a macro around that time. But when you start to recognize it, it makes things a lot clearer. But anyway, let's get straight into things. See what we can find. We'll start with this price. Can we start up here? Not really much. I mean, we have a break in market structure here. Let's have a look at this. So we have a short that could have been entered there. 50%. Let me just quickly change my Fibonacci to that. So that's 50%. Look at the respect. Come down. Where's the break? I'd say this is a breaker. Is it a breaker? You see, this is where the 1 minute comes in for me to recognize these things, you know? Anyway. Let me just get my laptop plugged in. South side liquidity. And then midnight candle. Excuse me. We come down, manipulation, then we expand higher. So let's look at how we have a breaking market structure. We have a nice breaker here. Low, high, lower, low. So this range here is a breaker block. We have a nice break of structure there. I do want to shrink the size of that. So this fair value gap would be an entry. if you wanted to trade that. And then where would you anticipate price running to? To be honest, a move like that I wouldn't really anticipate. You really have to know your bias for things like this. So I'm not actually going to put an entry there. We don't trade outside of the sessions anyway. That's a rule. So let's not. Then once this buy side liquidity gets tabbed, it's interesting because I'm so used to using the, what is it, the 5 minute. So like I know there's going to be an entry in this on the 1 minute, but you can't really see it. You can't see it on the 5 minute, but you can see things like this. You know, all these little fair value gaps that are getting created. We have some consolidation here. I'm just going to mark out what I'm seeing, to be honest. That's what you always do. Facts. All these gaps getting left away. So these are likely to get, is that filled at some point? Yeah, I was going to say, with this amount of liquidity, with these amount of gaps getting left open like this on the way down, I anticipate that to get run up on the buy side eventually, which we see happen. So that's quite interesting, isn't it? Now this is the Monday, remember, so let's not beat ourselves up too much for not necessarily liking the price action or understanding the general bias. That's a breaker. Ooh. This could be a buy though. I run into this because these are relatively equal highs here. If you don't know what relative equal highs are, I have a video saying beginners FOREX on my channel, explaining what relative equal highs are. That came out this week, so you should definitely check that out if you haven't yet. I don't know why my laptop's lagging. I'm struggling with a lot of lag right now. Which is not ideal. So I'd get out my position up here, because that's where the relative equal highs are residing. And then you can see we consolidate until the New York session starts, which is 7 a.m. And that finishes at 10 a.m. And then we got the afternoon, the London close, which is usually where there's some kind of run on stops. But yeah, let's look at the the London morning session. So we run higher, take out these stops here. Then we aggressively come back, take out the sell side. So buy side gets tagged, sell side gets tagged, and then we find support. This is then the order block. To be honest, I never mark out order blocks. So this is interesting. I'm going to start doing it now though, because order blocks are a PD array which I don't really pay much attention to, and considering it's ICT's most famous, I should probably start looking more into it. But we have this breaker, low, high, low, low, and break. So this whole range is actually a breaker range, which we could be buying in. You want to see it close, like you see how we aggressively run through that? That's what we like to see. As soon as it closes above it, we can enter as it touches, pulls back into it there. Crazy, right? It almost seems unrealistic, but it's doable. Breakaway gap. And as this trades down, excuse me. As this trades down, that's what I'd like to enter on. Also, this is a bearish, tan bullish order block, as I like to call it. Inversion, order block. I love this, and you can see how this range is filled. We delivered on the upside, downside, upside, and then we leave it. As soon as this expands and closes above here, we can enter on this. Nice breakaway gap here. I call this one the breakaway gap and not this one, because this is within that range. Does that make sense? So this gap is within the range. This is the gap which creates the breakaway. So I'm going to call that a breakaway gap. I hope that makes sense. I'm not really sure if that does. So we're into there. Got some beautiful relative equal highs here. What do we find? We find support on top of that. I'm just looking. And then eventually we tag these relative equal highs, which are very relatively equally high. So, and we do that as during the transition into the London, in the London close, we take out that, so we do the run on stops, and then we can expect either a continuation or a reversal. You can see in this case we have a continuation, but where do we pull back down to on top of this high, this order block here? The last down close before the up move, and that's what we trade to there. Touch it twice, 1, 2, and then we break. Where am I getting out of my position that I entered down here? I'd get out on this candle here. Now, if you know we're going to have a continuation to the upside, we can buy this order block. If it was a reversal, we'd probably see a much more aggressive movement, and then we'd expect these lows to get ran. But you can see how it has high resistance pulling down until eventually touch it. So you can buy on the order block. I'm going to put a thingy there. I've never bought an order block, to be honest, which sounds crazy because you think I would have, but I have never. I usually buy fair value gaps or breakers. That's my usual go-to. But you can buy this if you know that the drawn liquidity is on the upside, which I believe it was. Well, it obviously was, because it needs to make the high of the week somehow. And we did, just as I called. Got a swing low, high, lower low. This makes this nice beautiful breaker there. Let's look at the 50% level of that wick. Beautiful, wow. It's a mohawk. It's allowed to trade through it a little bit. That's what we see. We allow for that. We allow for that. That's okay. But that's interesting. That's consequent encroachment of this, and that's because this is a range. So if we look at this as a fair value gap, I'll show you something really cool. So although we have the breaker, low, high, lower, low, and break, and come down into the breaker and then expand aggressively higher, wicks are ranges too. So if we look at this wick specifically, this is a fair value gap, right? Because wicks are fair value are gaps too. You can see we traded through it on the upside. The gap still exists, so now it should act as a bullish fair value gap. Do we see it act as a bullish fair value gap? Yes, we do. And then what happens? We find support and we continue higher. So that's how a wick acts as a fair value gap. And that's what ICT means when he says that wicks are gaps too. Something to consider. And in doing so, we create a nice breakaway gap at the same time. So there's a lot. This is a beautiful, beautiful piece of price action. Middle line. Oh, no way. That's new. What? You can mark out the middle line. What? What? That's crazy. That is crazy. Oh my goodness. So no more measuring. Wow. That's interesting, isn't it? Right, anyway. That's crazy. That is crazy. Have they got... Right, middle point. Interesting. Anyway, so we run up into this buy side here. We could let 50% of our position here. Got highs here, and we're aiming for up here though. I'd probably like 50% above there because that's the Asian session. Look how we consolidate on that opening. Remember this is the Sunday open. Look how we consolidate around it. What are we doing? We're accumulating. Oh, accumulating. Then we eventually run up into these highs. Now we don't actually take out this high yet. To be honest, I'll probably get out of this consolidation anyway. That'd be a target in itself as well. So let's do that. Like that. Then we consolidate for the rest of the day. I don't usually trade past this time anyway, but a very active Monday like that would be fun too, for sure. You also have a bigger breaker here, low, high, low, low break. But we don't come back down for a while. So that's Monday done. How long have we been going? 21 minutes. Wow. Okay, we'll get started on the Tuesday. Remember, we're going to be doing every single day of this week because it was beautiful price action. And if you were with me, you would know that I was calling it to the pip. Okay, not to the pip, but there was very, 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 what's the word? Accurate price. Readings going on. Well, I can't believe that you can add a midpoint to a box now. That is crazy to me. Don't go like that. It's amazing, but wow. So this is pretty much just consolidation. I mean, if you wanted to trade it, excuse me, I'm so tired, man. This isn't the best. Anyway, let's get straight to the London session. So we pull back down. Where do we pull to? Let's have a look. What do we pull down into? This range, the consolidation that happened here. Interesting. And what I have my eyes set on specifically with this range is this move here, this low and this high. I like the look of that. As in this range. I don't even know what you'd call it. Would you call it a breaker? High, low, higher, high, would break lower. Or you could say low, high, lower, low, break higher. So I guess, yeah, it's a breaker. Low, high, low, low, break higher. Came back down. Consolidated. Pull back, run these stops. Grab liquidity, buy more. And then we continue higher. So, and look what I can do. This is crazy. Wow. That's going to save so much time. So you see how this gap's left open. Interesting. Let's talk about, not talk about, but let's look at how we run these stops. Sell side. And also look at how we closed or opened. We opened back at that midnight candle. But anyway, run the sell side. Liquidity. Pull back, run and stops. Has to be done. breakaway gap. This, we see this range left open. And then, right, so we're in 5 minutes left of this video, guys. I like this. This to me, this is beautiful. This is a beautiful reversal. So where's the? We got a low, we got a high, we got a lower low, break higher. We even have a low, high, lower low here, and this acts as a breaker. So we're gonna look into this, and then I'm gonna bring this video to a close. But this kind of price action here, this is what I like to see. So that's a breaker. It's breakers within breakers, which is interesting because obviously the higher time frame you go up, you know, the bigger the breaker, so to speak. But these are all like breakers, and that's why you can see. I think they're really, when they do this, they're really defending and adding to their position, which is encouraging off higher prices or aggressive movement by looks of things. Look at that. Look how it runs right up to that buy side. Crazy. And after we've touched this breaker, remember this is like a midpoint breaker. It's like a, I don't even know what you want to call it, but it's a breaker for sure. Anyway, so we can buy that. And I'd probably, you know what, to be honest, I'd probably more like to buy this one, because why? Fair value gap and this swing high, which seems more significant to me. These swing highs are taken out, so we've got that swing high taken out, and we've got this swing high taken out as well, like so. And then we've got this order block traded to here, like so. Fair value gap there, beautiful. And then you can see you run right up into the buy side, taking out this high and the Asia session high, which is anticipated. And yeah, so that's going to bring us to the end of this video, guys. Don't forget to like, comment, subscribe, and I'll literally just be continuing in the next one, because I do want to get through the entire week. Thanks for watching, and I'll catch you in the next one. Peace.